Good evening. Welcome to the earnings review, your tidbits into company financials and operational insights. Thank you for joining us as we broadcast from Hampton Studios in Harare, Zimbabwe. I'm Ibn Mabunda, yo money man. On the show, we engage top echelon executives to get you up to speed with first-hand information. We also chat with the most competent analysts on the market just to ensure you're furnished with relevant and comprehensive market analysis. Tonight, we'll look at Innscor Africa, a listed heavyweight on the Zimbabwe Stock Exchange that has been in operation for over 30 years. But just who is Innscor? This is a light manufacturing group that is focused in the production of consumer staples as well as durable products. The group enjoys leading market shares in a wide spectrum of products and has over the years grown organically through acquisitions as well as diversification. Follow me as I take you on a jog down memory lane to understand how the group has come to be over the years. 1987, they opened their very first QSR, which is your quick service restaurant in Harare, which was branded as Chicken Inn. In 1993, they went on to acquire a crocodile ranch which was known as Estra, at which point as well they went on to establish the distribution group Africa, securing international agencies. In 1995, the group acquired a bread manufacturing plant. A key development took place in 1998 as the group acquired the Capri in a reverse listing on the Zimbabwe Stock Exchange. We saw Innscor attain a market capitalization of 70 million United States dollars. With expanded capacity, the group went on to open additional quick service restaurant, including the Creamy Inn, Pizza Inn, as well as Baker's Inn. By 2002, the group had expanded its QSR units into 11 African countries, including Nigeria, Senegal, as well as Angola. Key developments continued to occur within the group, as in 2003, they went on to acquire Zimbabwe's largest food processor, the National Foods. In 2004, the group acquired Qualcomm Holdings, then Zimbabwe's largest pork producer. In 2009, in another key development, the group acquired Ivan's, Zimbabwe's largest poultry producer. In 2010, the group unbundled Padenga, a crocodile producing entity. In 2015, the group went on to unbundle Simbisa, which was also listed on the Zimbabwe Stock Exchange. In 2016, Exia is unbundled and listed separately on the Zimbabwe Stock Exchange. Between 2016 and 2019, the group has acquired interests in Pro Feeds, Pro Dairy, as well as the Pro brands. But just how is the group organized? It has three subdivisions, which are the mill bake, protein unit, as well as the light manufacturing. And in the mill bake, this is where you find National Foods, Baker's Inn, as well as Pro Feeds. In the protein category, you also find Qualcomm, Ivan's, as well as the associated meat packers. The group has a presence in several African countries in the region. Now on to some vital stats where the group is concerned. With a current share price of 2,110 cents, the group has a market capitalization of 11 billion Zimbabwean dollars. The Innscor stock has moved 500% since the year started, over which the ZSE Top 10 has mounted by over 500%. Comparatively, the ZSE All Share has mounted 570%. Now, who owns Innscor? The key shareholders in the group, including the ZMD Investments, which owns 19%, the HM Harbour, which has 18%, as well as the Old Mutual Life Assurance with an 11% shareholding. And in ZMD Investments would be several players, including Z. Michael Fowler, as well as another player. At the helm of the group is Addington Chinake, the group chairman, as well as Julian Shonken, the chief executive, plus the group chief finance director, who is Godfrey Gwinder. This concludes the Halajou section of our show tonight. In just a moment, we will have a look at how the group is faring in as far as the operations is concerned. So don't go anywhere. Welcome back. Now we look at the operations of Innscor Africa. Particularly, they released a trading update for their third quarter to the 31st of March 2020, as well as their half-year financials for the half-year to the 31st of December 2019. And now joining me to discuss those financials is our very own Chief Analyst, Respect Gwenzi. Respect, good evening, and thank you for joining us on the Earnings Review.
It's always my pleasure, Eben. Thank you for having me.
Fantastic.
Sure.
Well, let's take a dive into the financials. Of note is the fact that these results, as well as trading update, are coming at a point where Zimbabwe finds itself facing and grappling with a series of macroeconomic issues. And over the 6 months to the 31st of December, they posted a revenue figure of $4.2 billion, which was a 16% increase versus the comparative period. And these figures are, of course, in inflation-adjusted terms. Their profit after tax scaling 14% to 688 million Zimbabwean dollars. What is your assessment of this very performance that we are seeing released by Innscor?
I think broadly, just like any other company in Zimbabwe at the very moment, it's very difficult to really deduce these numbers given the changes in currency and the impact on how these financials were prepared. I think much of the jump which we are seeing in HY 2020 compared to last year is really inflationary, and of course issues to do with taking into account accounting standards as well as possibly IAS 33 in how the financials are prepared. So basically we have seen a growth which is really a function of revaluations of properties, fair value adjustments, as well as earnings as well I mean the money that they're getting in USD terms actually inflating those numbers. So I think broadly speaking, this is really a reflection of an environment which is inflationary, which has actually driven the top line numbers up, as well as the corresponding EBITDA, as well as the PAT numbers. But I think it's also imperative to get to look more in terms of the underlying performance, which is volumes driven. But in terms of the numbers, this is basically an issue to do with inflation and exchange rate losses.
And now that you just mentioned volumes, I think it becomes vital for us to have a look at how the group has performed across its units. Pretty much it's a mixed grill, as we have different trends where its units are concerned. But of importance is the fact that the major units have suffered a dip, particularly in the 6-month period as well as the 3-month period over which we have a trading update. Let's just start by having a look at National Foods, where they suffered a 32% decline in their volumes to 211,000 metric tons sold over the period. What do these figures really tell us?
So looking at National Foods, it has got 3 main sub-segments, which is mainly the maize, the flour, as well as the stock feeds operation. Looking at maize, their numbers have not been as bad. Why? Because much of the maize meal in this market has been subsidized for over a year now. So you find demand remaining strong simply because the cost or the price in shops has not really gone up. So they really enjoyed the benefits of a subsidized market or a subsidized commodity. They had to procure from much of the maize from GMB, and of course they also imported. But even on the imported produce, they were also given these subsidies by the government. So by implication, where a consumer is supposed to possibly feel the pinch in terms of spend, they get to possibly pay, okay, as of now, a 10 kg of maize meal would cost about $70 in terms of subsidized maize, but an unsubsidized product is going for almost 5 times the figure. So I think that can really tell you the picture in terms of what drove the maize numbers up. So for the 9 months period, we have a positive 3%, but specifically for the quarter ended Q3, which is the quarter ended the
31st of March.
Yes, the numbers are very strong. We are up 49%. So this is really a reflection of the dynamics around the subsidy nature of maize and maize meal. But then looking into flour, I think the dynamics have been tilting lately. We started to see government first subsidizing flour, and then the subsidy was taken off sometime in late in 2019, and this had an impact in terms of demand because price-wise, we're seeing prices getting to recover in terms of matching the market. So you are looking at replacement cost, and that replacement cost is in line with obviously the exchange rate. So this is what obviously drove the figure, especially for the past quarters. But then they said for the quarter, which is Q3 compared to the prior quarter, they were up 10%. They just attributed this to possibly stabilization of that market post the issues to do with these market subsidies.
And also talking about flour, I think we have seen a relaxation on government's part in terms of price controls, which were prevalent pretty much for the greater part of 2019.
Yeah, sure. But obviously that move is driven by one thing. If you are subsidizing a market, you expect a certain price to be charged for that product. But once you remove your subsidies, you let market forces come to play, and you let the market price the product in a way that possibly leads a company to recover its cost. So that relaxation is really a reflection of removal of subsidies. So this is exactly why we had that sharp dip in terms of the 9 months cumulative performance in terms of flour. But also looking at bakeries, which is a division within National Foods, they also had a similar decline, which speaks to the same effects of subsidies, and then removal of subsidies, and then a gradual recovery. So if you look at the flour segment in Q3 in terms of performance, as well as Q3 in terms of bakeries, this is an uptick coming from a stabilizing market after the subsidies had been removed.
I realize. But also of note, I think, would be the issue to do with the influenza that had affected this very segment, which affected their performance over the past. And I think we are actually seeing a recovery from that negative effect that was actually...
Yeah, so there was a 2018 to 2019 challenge, and it typically affected the stock feed section. But instead of us seeing a clear recovery, especially on the stock feed side, there are other elements when you're looking at IVs and so forth. But from the stock feed side, this is a broader macroeconomic challenge where we see demand falling right across the market. But of course, the influenza issue came into play 2018 and 2019. It affected the number of eggs produced, the number of chick hatchlings and so forth. But basically, for the cumulative period to March, we're seeing a dip in terms of that aggregate.
Fair enough. Now to move on to another key unit, there is the profits, where the group recorded a 27% decline in terms of the feed that was actually distributed, as well as a 33% decrease in terms of the day-old chicks that profits actually distributes. What do these figures indicate?
Yeah, so similar to stock feeds under nut foods, the business model is almost the same with profits. You are trying to supply a market which obviously takes care of issues to do with eggs and so forth. And this is exactly what we're talking about, the fundamental aspects of the economy weighing on that overall performance. But it's basically a demand issue. There's been subdued demand across the economy, and that actually fed into the decline in terms of business and profits, which is almost the same as the nut foods unit as well.
And I also realized the same trend playing out where the Qualcomm division is concerned, a 17% dip where that is concerned. However, Ivan seems to be reversing that decline in terms of the volumes, as they recorded a 26% volumes growth in the table of eggs that was actually sold there. As you can see, over the 9 months period there, 14% jump. What do these figures show us, and vis-a-vis the macroeconomic conditions that we have?
Basically, looking at the overall performance, it's quite mixed. We're seeing eggs obviously going up, and then frozen chickens going down in terms of volumes. But I think it's also a factor of margins. When you're looking at high margin products, just like chicken, they get to be forgone ahead of those low margin products. So you might find eggs which are low on margin obviously holding in terms of demand ahead of frozen chicken. and the last part as well. This is basically high value products that are obviously being forgone by the consumers.
But also, I think in the face of a worsening economy, there is depressed demand that is affecting the affinity of the clientele to actually buy some of these products, was choosing to pursue other alternatives. How does that feed into the model of the group?
Yeah, they do have got some value products. I think every business which needs to sustain or to operate sustainably in this market have to have these segmented products where you are feeding into the high end, you're also feeding into the low end. And in an environment such as we are, you find consumers trading down the value chain, and that has always been the case. But for Innscor, they do have got lines which speak to these low end of the market, and they have been well up there in terms of part of their produce, in terms of meeting the demands from the low end segment of the market.
Now, to talk about their light manufacturing unit, I think we just covered their two main units, which are the mill bake as well as the protein. Where nut pack is concerned, their volumes were also in the negative, coming off 18% over the period. How do you assess these very figures?
For nut pack, this is clearly a new unit, and the numbers are showing that on a cumulative 9 months scale, they are actually up in terms of volumes, and they're actually running over their capacity. So they are in the process of increasing their capacity at Nutpack, especially the corrugated plant. It has seen a growth in demand, and I think it also speaks to their ability to cover other segments or other players outside of the group's own units. For example, tobacco, you got to be supplying paper in those markets. So those numbers are really up for Nutpack, and this is because it's coming from a very low base, and they're looking at increasing their plant capacity.
Pro Dairy is also up 18%, while Pro Bottlers has suffered.
I think that's one of the most interesting numbers there, because according to them, they now control the biggest market share in terms of maheu, as well as one other product, which is butter. I'm really yet to verify those numbers, but what it really means is probably outsmarting the likes of competition from Delta, and most notably from Dairy Board. So I've seen the brand grow. They move with the light brand within those respective products in the market, and I think they have been strategic enough in terms of pushing those products and obviously muscling out a bit of market share from other players. And it's really worth watching as we go forward to say how does that business grow. But looking at Dairy Board, their numbers were down in terms of those lines. They were actually down about 20% from their latest numbers. So I think there's something good that Pro Dairy is doing. But I also believe that their base has been low, because this is a 5 to 8 year old business into this market. So they might also be coming from a low base. But if somebody says they have got the largest market share, it means they're now operating at almost the same level and even higher than competitors. So it's really worth watching. That's in terms of Pro Dairy.
Now, the trading update gives us much detail right up until the 31st of March, and also gives some highlights into the impact of COVID-19 in as far as their business units are concerned. Of course, they just highlighted how they could expect COVID to affect their operations, but they did not get into the estimations in terms of volumes and so forth and so on. But I would want to ask you, Respect, what is your estimation? How much of an effect would COVID be on their operations, their volumes, as well as the broader picture?
So the most critical loss in terms of production was mainly in April across all businesses, right across the world. Most businesses lost as much as 80% in terms of their production, and obviously also pushing the product in the market. For Innscor, they were deemed to be an essential service, so they were really operating within that period. but obviously the challenge was with the market in terms of offtake of the product. So they also realized some sharp decrease in terms of their demand at that respective point. So for most of April, they did not register some good numbers. Of course, they didn't give the numbers, but other players in that sector who are coming through with their numbers, they're showing some dips of between 50 to 80%.
Respect, while we're at it, there is a trending issue where the Competition and Tariffs Commission has come in to say Innscor needs to dispose of several of these pro brands in that regard. Can you shed more light where that is concerned so that we come to understand exactly what's going on?
So this is a matter which has been before CTC for quite some time now. Most of these investments happened over the past at least 4 years. The acquisitions of pro brands, pro feeds and similar. So they're associates in a way, because their investments in there, they're not exclusively 100%. It's 25%, 18%, 30% in some respects, depending with which particular business they have acquired. But more significantly, the issue here is CTC actually looks into issues to do with competition. If you're acquiring a business which has got a similar underlying products is the same as the ones that you're already giving out to the public, that means there might be a breach depending on your size. So looking at Innscor's size, they basically control 75% of all food-related business, that's in terms of production in Zimbabwe. And going on to acquire the second biggest player in that segment actually meant they are almost controlling 90% of all food-related businesses in this country. So there was that competition issue there, and so there was a determination that was made over the past 2 months, I guess, if it's not a month, to then say you need to dispose of this, you need to reverse this investment, and obviously also the penalty that comes with it. But Innscor is not new to this. It happened early after around 2010. There was also an issue to do with National Foods additional acquisition, but they get away with it. And now I mean, we wait to see what really happens next. But really, issues to do with competition, they're really paramount. Why? Because one player can get to have a clear monopoly over a market, and they get to also manipulate prices at the expense of the consumer, and it's not in the best interest of the country, rather. But Innscor is a big player. It's also a big contributor to the fiscus, and one way or the other, we might see a government resolving otherwise. But as it stands, they are supposed to unwind some of these investments over the next few years.
I need you to explain in detail as to which business is cancelling out which one and which one is getting disposed of. Natpac would possibly at conflict with Pro Bottlers. Is Pro Bottlers set to go?
All the pro brands businesses these are just 4 businesses. It's
okay, so Pro Dairy,
all these they are almost within the same investment. So they bought all these, but in different purchases, but they all fall under a similar holdings company. So the idea there was to simply dispose of these collective businesses.
I realize. So in terms of value now for the group and for the shareholder, how much of a knock would that be, and would that not maybe have some negatives associated with the move?
I think actioning such a move is not going to be easy. Why? It takes a real muscle for one player to put up the kind of investment or the kind of money that Innscor might ask for those investments. They're actually in the process of building plans across at least 3 of those units. So they're actually investing as we speak against these investments. So actually to even imagine that at year 2 after today, there's anyone in this country who might have the kind of cash flow positions that Innscor possess and could actually buy into that business, I think it's going to be difficult unless you're possibly bringing in new money from an external investor. So I think these deals, they get to be so complex. You might get to year 10 before such moves are such moves are affected. But going back to the question which you asked in terms of which businesses actually get into the same line of businesses that Innscor was already operating in. If you're looking at the stock feeds segment of National Foods, they almost entirely have a product list which is the same as Profits. If you look at the Pro brands, this is basically manufacturing of food items and ancillary stuff. You also get that same bouquet of products within the National Foods portfolio as well. And also the Pro bottlers as well, and Natpack, they're also conflicting businesses. And they also had a dairy business before acquiring Pro Dairy. So all these are complement their businesses within the same segment, and they were obviously conflicting each other.
That being said, I want us to get back to some of the units. Initially, we were just going through how their volumes performance has been vis-a-vis the results presentation or the results that were published. But now I want us to get a little bit deeper into the operations that we have under some of the key and strategic units. Qualcomm division, they have got what they call the Triple C pigs, the Qualcomm Foods, the Simon's pies. How strategic is this unit to the group?
So in 2015, the company Innscor actually decided to privatize this operation. It has been listed for quite some while, early into the 2000s, and they actually delisted it in 2015. But they went on to actually put in a lot of investment into this business, and I mean, consequently, the numbers are actually speaking, especially in terms of their production. Mainly, they specialize in terms of pork, and the pork sales for the quarter, as well as even for the 9 months cumulative, they've actually been trending upwards. But this also signifies the aspect of production and also the aspect of value as well. Looking at if you then compare with Texas, the kind of numbers there in terms of meat, they've really been trending upwards for either side. So I think this is also a market issue. But in terms of production, the numbers were quite solid in terms of in terms of Qualcomm. Pigs processed, which is also a function of production as well, actually going up. It's only ancillary, which is a related food produce out of that pork production, and these are the ones that are down. But I also believe that most of these products are also high value products, and they get to be these are your canned foods, your some of those high end market products, and these are suffering that knock because of the movement towards value products. So this is why we are seeing this variation. But the overall performance, it actually shows a split between the general pork and also these ancillary products.
And now getting back right where we started, the Millbake division, which is a key revenue driver,
sure,
where the operations of the group are concerned. Because they are undergoing an automation of their plant. They completed phase 1, which resulted in a 25% increase in terms of the volumes capacity, and now they're readying for a phase 2 should there be stability where the flour as well as the bread market is concerned. How important is that very development?
Yeah, so generally Innscor has been so robust in terms of their investment, leveraging on their cash flow positions. They became the first company in Zimbabwe on the listed company side to report a revenue of over 1 billion for the 2019 financial year. Actually, they did 1.2 billion. Of course, it was debatable to say, was this still really actual dollars or it was partially ZWO dollars, but you can't take it away from them. The numbers actually show that they reported that much in terms of revenue. So if you're generating as much, your cash flow position also gets to be far much high, and your free cash flow also tends to be high. And this is the money that a company can use in terms of growth. So they've been driving organic growth through acquisition and also through investing in some of their processes. And the bread division, especially from the bakers inside, they have been more particular about it. It's one of the only inns that remained within the Innscor stable. So they've been investing aggressively on that. But I think that market really is quite volatile. Why? Because government get to be involved here and there in terms of the wheat side, and they get to be subsidy issues and whatnot and whatnot. And this is sometimes what affects the demand side. But in terms of the supply side, this automation actually means that they get to increase the supply, and that there's always been a lag in terms of the demand and supply of bread in Zimbabwe, in terms of the loaves that are required per day, or all things being equal. But currently, the issue to do with affordability, there have been quite some challenges there, but their supply side is quite intact, and it's going to be obviously made better by this kind of investment which they're bringing in.
And still on the Millbake side, two key developments: they're introducing new products, and they've also reopened two of their key factories. How relevant are these developments to the advancement of the group?
Yeah, underpinning any kind of growth, I think it's research and development, and they've come up with a number of products. It's not only one. These products have mainly been driven on the nut food side, and some of them are quite a success in the market. So I think bringing in new products, finding traction, obviously it underpins growth. It obviously complements the aspect of putting in new equipment and so forth. And I mean, we can't overemphasize that any kind of growth should obviously leverage on such things as production processes, but also knowing what the customer wants, which is exactly why some of these products are performing the way they are in the market.
Now, quickly before we go, to sort of escalate this to a strategic panel, if you check the history of the group, they have disposed several units. Padenga, which exports crocodile skin, crocodile meat. They also disposed of Distribution Group Africa. It's listed separately, an entity which also plays a little bit on the forex side. In an environment like Zimbabwe, where foreign currency becomes very much important, how strong is this group on a regional perspective, an international perspective? And should we, at this point, perhaps not think back as to whether the disposal of Padenga, the disposal of Exia, the disposal of Distribution Group Africa, would be something to look back at with, that other eye to say, was that strategic? Because at this point, I'm not seeing much of foreign currency generation where the group is concerned.
Yeah, that is quite true. I think, almost 98% of their revenue is locally generated. But I think when you are looking at a strategic perspective and the idea behind unbundling of companies, it's always to try to unlock shareholder value. Sometimes you spin off a company, it gets new funding, it gets more focused, it also gets to try to rationalize its own operations. Whenever you're having so large a group, sometimes you get lost, or you fail to concentrate on certain segments of the business that might be requiring attention. So behind every such move has been the need to unlock value. You realize that you have nurtured the business. That's been the Innscor model. They buy acquire a small business, they nurture it, get it stronger. It now can actually survive on its own, and they then dispose at some point, and they get to get value out of that. So this has been exactly what Innscor has been doing, starting with Padenga, acquiring it in 1993, offloading it in 2010, and it's now one of the biggest companies on the Zimbabwe Stock Exchange. The same thing with Exia, as well as Simbisa. So I don't really think that for every business to be successful, they just have to be centered on being an export-oriented business. Yes, times do change, but Innscor is strong, even though their income might be concentrated exclusively on this market. But they still have got DGA, which is your Distribution Group Africa. Much of it has been disposed. It went with Exia, but they still have got a bit of interest in that. So I think it's not really, success is not really, it does not only come from having an export business that only cushions you when times are rough, such as what we are in. I believe that all its investments, looking at National Foods, looking at the Pro brands as a group, I think those investments are quite solid and they are market leaders, and given the right environment, they will definitely thrive.
Thank you, Respect, for the illumination. Thank you, viewers, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and visit our informative website, www.equityaccess.net. From the Equity Access team and I, Dangi, and ciao.